Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. A big episode in store for you this evening. We're going to be dissecting today's rate cut from the Fed, in addition to news out from ABTC, Hive, and BitFuFu. We've got a lot to talk about. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. Anthony absolutely loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're holding any of these three stocks and what you thought about today's Fed meeting. With that being said, let's get into today's video. Okay, guys, away we go. Wednesday evening, decided to do a little later podcast today. That's because we had a big Fed rate decision out this afternoon. Wanted to let the markets settle out. Now, Anthony, you're over in the Far East. I'm here in Canada. We just identified a 49-degree temperature difference between our two locations. But nice to have you in the morning fresh here, and looking forward to getting your insight on the Fed rate cut among minor news.
Yeah. Great to have an opportunity to do it at a different time.
Hey, so we've obviously been talking about this rate cut throughout the year. Trump is really looking to get some relief for the market. Jerome Powell has been a little maybe resistant to that change. Now, it was widely expected, 97% on Polymarket going into today's rate cut, that it would be a 25 basis point cut. Lo and behold, that's exactly what we got. My question for you, Anthony, why is this so important to equity markets, to companies like the Bitcoin miners that have these large CapEx investments, and where do you expect these miners to go based on today's decision?
Well, any relief in the in the interest rates is a bonus to companies that are trying to grow. The main thing you need to grow is to raise capital. And some of those levers involved raising capital via debt, so loans, notes, and this rate cut now will effectively pass through now to potentially bank rates, as we normally see. They always highlight the mortgage rates when these rate adjustments fall, because most people around the world have mortgage rates. So when you see an interest rate cut in the US, then the US mortgage rates tend to follow that rate. Equally, savings rates also come down. So it's not a win-win all the time. But we're looking at these companies, the mining companies, they're trying to grow, not just in terms of hash rate for Bitcoin mining, but now focus their attention on growing ready for HPC, because we've been talking now for the last probably 12 months about this movement towards HPC, and the fact that the more predictable revenues. Well, to get to those revenues, they're going to have to spend a lot of money getting their facilities refurbished. And if you're borrowing, I don't know, 100 million or even $1 billion, a 0.25 reduction in the interest rate on $1 billion is $2.5 million of interest a year. So it's a great a great incentive. And I mean, I think from the president's point of view, he'd like to see even more coming down there. He thinks rates are significantly high at the moment, and he's looking to have someone in the Fed leading on this that's more proactive in reducing. But caution has to be acquired as well. It's not just a case of let's just reduce interest rates. There are reasons for this, and they are put in place when the economy is at a certain point. So it's great to hear this news today, and let's see the impact on the miners over the next few weeks, as they probably go out and source more funding with maybe more opportune rates.
Yeah, well said. The miners did bounce after the news came out. You can see equity markets as well didn't close necessarily in the green, but paired some of their losses. And you've told us really some horror stories of the last cycle, where a lot of miners got upside down on some loans based on those interest rate changes. So obviously very important to companies in the growth phase here. Now, in terms of Bitcoin itself, not a real eventful day. Closed out, or the time we took this photo, 92,500. So again, above that $90,000 range, but a stone's throw from all-time highs.
Yeah, but if you look at this, you put the 5-day chart up there, and you can see it's sort of like slowly making some ground, and I'm quite happy if it's slowly making some ground in the right direction. Nobody likes the big volatility swings, and you can see a couple of moments on that chart there, even where it went from 88 up to 92 in probably the space of a couple of hours, but then came back down to under 90,000. So. I was speaking to some people last night who not really in the Bitcoin space, but they first thing they said was that the reason they weren't so much interested was because of that volatility. And they do have a point. The volatility is there. I tried to explain. If you zoom out over a longer period, the volatility isn't as obvious, and the trend line over a year or longer is certainly going in the right direction. But you look at it on a sort of a day or a 5 day or even a month, you can see the volatility a lot clearer. And this 5 day chart just highlights that there. From 90,000 to 94,000 looks like it happened in the space of about 15 minutes. Well, it probably did happen in the space of 15 minutes, but then it's pulled back into the 92,000 range. But the trend there looks like it's heading in an upward direction, and we'll keep a focus on that over the next week or so and see if we maintain that. As I say, there's not a lot of negative news around Bitcoin in at all out there, and we've seen the likes of Strategy continue to buy Bitcoin. They bought another 10,500 or 10,600 Bitcoin just this week. To take their total, I think, to about 660,000. And Michael Saylor, the CEO of Strategy, no, he's not the CEO, is he? Michael Saylor, the chairman of Strategy, he was out at the Bitcoin conference in Abu Dhabi, basically just letting people know that they just, continue to purchase, and they're going to continue to purchase all the way through. So there's a lot of positivity out there. We know the institutions, the banks. We know that they're starting to get their ties into Bitcoin now. So, it's just really whether this is sort of like the trading aspects of Bitcoin, which I don't particularly like. People are actually gambling on the price of Bitcoin going up or down. That might have an impact on the price. But we're hopefully going to have someone come on the podcast shortly, Bryce, to give us a bit more explanation about some of this technical detail.
Yeah, hoping to get Freedom by 40 back on the podcast here to get a chart analysis on some of the top miners and on Bitcoin as well. But you look at the 5 day, as you say, higher highs, higher lows, which is exactly what we want to see. Now, the nice thing about doing a bit later podcast, we had time to let the market actually close out. You can see, I think, 6 miners closed in the green on the day. So despite that nice little bounce off the rate cut decision, not quite enough to turn the entire sector green.
Yeah, and great to see Soluna coming out green. If you look at the Soluna share price, actually heading towards $2 as the latest price there, and bear in mind, they've had some updates out there. They had this raise through dilution as well, which now that's had time to settle, and it looks like shareholders have thought that it's obviously a positive thing. If you're going to raise capital, nobody likes dilution, but it's what you're going to use the money for. If you're using dilution to pay bonuses, that's not going to go down great with shareholders. But the one thing that John's articulated literally all the way through that, and I think he puts out more information on social media about the company, about what's happening pretty much on a daily basis than any of the CEOs I've seen out there. And so he's keeping shareholders abreast exactly what's going on and exactly what they're doing, shovel by shovel, effectively. And so I think people are starting to take a little bit of notice of Soluna, the fact that they're now operating on more than one site at one time now, and they're growing, and they do have a number of levers available to them now. And as the share price rises further, that even gives them more levers available as well. So I think it's there's a lot of positivity around Soluna, around the sort of like the projects that they've got in place, the projects that are going to come online as well, and they're growing, as we saw in their November update. They're growing their hosting business significantly month by month at the moment. The last couple of months, it's nearly gained, I'm going to say, close to an exahash of hosted. And we know in the first quarter of 2026, we're going to see that massively increase because Galaxy are already moving their machines and containers all the way to the site, ready to be installed and up and running, by the end of Q1.
Now, the other thing that stood out on here to me, very light volumes. If you look at the volume column here, compared to what we've seen over the last few weeks, drying up considerably in the miners. So you can see a lot less trading, a lot less maybe retail involvement. based on this pullback we've seen over the last few weeks here. Now, talking about the miners specifically, a bit of housekeeping to start off. BitFuFu, they're presenting at the Emerging Growth Conference in Miami tomorrow. Now, this is interesting. We were actually fortunate to see Charlie Brady, the same person doing this presentation, up in New York. This was kind of our first exposure to BitFuFu. We've learned a lot more about their cloud hosting, third-party hash rate now, and it really does seem like this company is onto something that a lot of the other miners maybe have overlooked.
They are. And to be honest with you, we came away from New York having sat and listened to 16 presentations. This one really caught my attention from BitFuFu because really they're doing something that nobody else is doing. They've tapped in to retail market through the cloud hash rate. So, retailers can buy a portion of hash rate there and their investment, will get a return on that hash rate mining Bitcoin. And the last update, I'm sure it said well over 600,000 current subscribers to the cloud hash rate. So it's a massive amount. Now they do operate that predominantly in Asia, so it gives people in Asia the opportunity to get involved in Bitcoin because we know that obviously China banned Bitcoin mining. So, there's a lot of negativity that side of it. But we saw something similar from Bitdeer previously. They've tended to sort of pull back on that now, and they're focusing on really self-mining with a bit of hosting as well. But this is a great opportunity for BitFuFu. They're one of the few miners, and I'm saying few miners, that came out with a real net income in the last quarter. So it's obviously paying off for them, and at the same time, they've got they're trying to obviously grow their self mining as well. So a couple of nice business models in place there, but yeah, it really caught my attention, and I'm sure if you get the opportunity and you're in Miami and you can attend that conference, it'd be well worth spending time to listen to them and even get the chance to speak to Charlie as well, a very approachable person, get more information from the company.
Sure, yeah. And the cloud hash rate really works well when Bitcoin is kind of trading sideways or not doing a lot like we've seen over the past few weeks here. Obviously, if it's aggressively accelerating, you want to be doing your self mining, but this seems to be working out very well, at least in the last few quarters for FUFU. Now, Anthony, you just mentioned that Strategy, Michael Saylor, they continue to have their foot on the gas in terms of Bitcoin acquisition. A nice little post from American BTC today as well, talking about the console wars, making, I guess, a joke towards the GameStop group here. They've now passed them on the list in terms of top corporate hodl, 4,783. So we heard from Matt Prusek on the podcast and Asher Januta, actually, that this company is focused on one thing only, Satoshis per share.
Yeah, absolutely. And if you think about the main company, they've got well over 10,000. So you could argue this, the whole company's got like 15,000 Bitcoin on the balance sheet. And that certainly puts them in that sort of close to that top 10 or even in the top 10 bracket there. So yeah, if a good update from them. They also, so American BTC, they mine the Bitcoin. They lease obviously their infrastructure from Hut 8. But they've got around about 25 exahash of mining Bitcoin. Now, if you look at the update they provided today, they've said that they've acquired 416 Bitcoin since the last update on December the 2nd. So we can make an assumption that they've purchased the majority of that, because at the moment they've got a hash rate of about 25 exahash. Now, they haven't put out a monthly update. They're still thinking on whether they're going to do that going forward. But we do know from other companies that have put monthly updates out, if you've got about 25 exahash operating, then you're going to be getting close to about 300 Bitcoin. So if you think about the period from the 2nd of December through to the 9th of December, that's literally a week. You'd only be able to mine about 75 Bitcoin. So this is looks like a strategic purchase. And remember, when we had Asher and Matt on the podcast there, it wasn't just about mining Bitcoin. They're going to make strategic purposes and grow that hodl. This is the whole point about American Bitcoin. It's all about how you acquire Bitcoin at the best price. And if they've made the opportunity over the last week or so to maybe tap into the Bitcoin price when it when it dropped as low as 90, even into the 80s, they've made obviously a sizable purchase at a good price there. And they'll probably continue to do that. But yeah, overall a good update. And you're quite right. I like the metric there, Satoshi per share, or the Satoshi per investment, maybe another way of looking at it. If you want to do a comparison with miners, you can say then for every amount you invest in a miner, how many Satoshis would you get for that investment? According to their balance sheet, and it might be a good one to do a sort of comparison against all the miners.
Yeah, maybe let us know in the comment section below. We were thinking potentially Satoshis per $1,000 invested or $100 investment in each one of these miners to kind of compare apples to apples. But we'd be curious to hear if you guys would like to see that metric. You just mentioned 25 exahash per month puts out about 300 Bitcoin, Anthony. That's a perfect segue into the Hive update here. They were running at an average just below 25 and came in at 290 on the month.
Yeah, and we know that Hive's updates are pretty good. They're usually in that, for the previous 4 years, they were the top two along with Bitfarms. This year, they're in that group at the top there, the top 3 or 4 and it's so close. You can't afford any sort of like let up really, because I look at the information even for November. There's a hair between sort of like the top 3 or 4 miners in terms of the numbers coming through there, with the likes of Riot, the likes of CleanSpark, the likes of Hive, DMG normally have a good month as well. So you've got the 4 miners there, and they've been pretty good every year. But Hive sort of like have been top miner in 2 of the last 4 years. And I've always been in that top 3 pretty much every year, and probably likely to stay that this year. But a good update received so they've mined 290 Bitcoin. That's actually more than they mined in the previous month there. And remember, we know the difficulty impacts. Now, the reason they have mined is the total operational hash rate available to them has increased from 23.6 in October to achieving, remember they had that target of 25 by Thanksgiving. Well, they achieved that before Thanksgiving, a couple of weeks before Thanksgiving. They actually hit a high of 25.4 exahash. So over the 25 exahash target. Now, in terms of average operational hash rate, this is the one where we see the usage of the hash rate that's available. So it's different from the plugged-in hash rate because they have to obviously turn down machines. So the average operational hash rate also increased by 7%. And that's the reason why they have actually mined more Bitcoin. Operational power, 420 megawatts. Now, they do expect that to increase to 520 megawatts by the third quarter of 2026, when they finally get their final power up and running there in the Paraguay site at Guiguazo. Bitcoin mine per day actually increased again because they've got that better operating hash rate. But the final metric there, the Bitcoin mine per exahash. Now, if you think about having a good month in November, they've actually mined literally nearly 1 Bitcoin less per exahash in November than they did in October. That's a drop of 6%. That's the impact of the difficulty. That's what the miners are facing, 6% in 1 month. We talk about a 50% drop in 4 years. When the halving occurs, we've seen a 6% drop in 1 month there. And that's happened so many times in 2025. I think, predominantly, every 2 weeks we see a change in difficulty. And I'd say, more than twice the amount of times it's gone, the difficulty's increased than has gone down over that period, which means they're constantly being, that their production is being eroded month by month. Remember that when Hive came out at the start of the year and said, we aim to get to 25 exahash by Thanksgiving, which will mean we can mine 12 Bitcoin a day. Well, they're not mining 12 Bitcoin a day. They're mining 9.7 Bitcoin a day. So effectively, if you rounded that up to 10 and say if they can get the average operational hash rate to 25, which was their target, and then round that up to 10, that's 2 Bitcoin lost just in this year. That's close to 20% of your production lost in 2025. That's a significant pullback in terms of production. And this is one of the reasons why a lot of the miners are sort of like, they're looking at this now thinking, how long is this going to go on for? We expect when the Bitcoin price drops that machines will come off the network. we're not seeing that. We look at the Luxor charts on a regular basis, and it shows that the global hash rate has been increasing all the way through 2025. And yes, it may have pulled back by a very, very small percentage, but then it seems to rally again then. And this is not what people expected with the Bitcoin price, because when the Bitcoin price reduces, if you're not able to mine profitably, you have to turn the machines off. And it looks like people are accessing really cheap power or even stranded power or free power and are able to keep not just the most efficient mining machines going, but even less efficient miners and still achieving, a great margin when you've got no power costs.
Bit of tough sledding on the Bitcoin mining side of things. Now, fortunately for Hive, they've got Buzz HPC as well. Now, they gave a great update there in terms of their tier 3 data center upgrades in Toronto and on their Dell partnership, with the first shipment of GPUs actually scheduled for Q1 of 2026. The other line that we both noticed in here, Anthony, actually ranked the #1 worldwide company for network download speed in the latest semi-analysis Cluster Max 2.0 report. So Buzz HPC, again, predominantly operating here in Canada, seems to be making some waves and definitely getting a bit of recognition.
Yeah, and they're upgrading the Toronto facility, the 7.2 megawatt facility there for tier 3 plus sovereign AI applications. And this growth in HPC, remember they talked about achieving the $100 million annualized revenue. I think that's now increased to $120 million of annualized revenue during 2026 there. So by the end of 2026, they aim to get from, I think it's at the moment, it's just over $20 million of annualized revenue, but that's due to increase to about 120 over the next 12 months. So we'll obviously pay close attention to that increase in there. But it's great that they've probably, in the space, had the longest strategy in terms of using GPUs, because remember in 2022 they were still mining Ethereum, and when the fork happened and Ethereum mining stopped, they then had 40,000 GPUs to then start consider what they were going to do. And it wasn't long after that point that they thought, we can direct some of these GPUs. They were able to use them. They could be used for different services. They were using some to mine some other coins apart from Bitcoin, but then they realized actually this is a potential here for high performance compute, and they started pushing towards that on a smaller scale to get their experience in place. And as you can see now, they're starting to grow that experience in more than one continent.
They certainly are. Now, that's it for today's Bitcoin miner updates. The other update we wanted to talk about, this Friday's newsletter, we're going to be introducing Miner Madness 5.0 to kick off 2026. Now, this was a competition we ran 4 iterations of. It's a quarter-long Bitcoin mining trading competition. All of the sign-up information, details, news are going to be available in this week's newsletter. So I wanted to definitely give that a few minutes of recognition.
No, absolutely. And the difference this time in the competition there is we're issuing cash prizes now. So if you're the lucky person who can, choose the best 3 mining stocks to rally the most over the 3 months, there's $300 going towards you. And actually, the opportunity, you can have the $300 in Bitcoin as well. So for those of you that have a wallet address, we can do the $300 in Bitcoin. For those that you don't have a wallet address, we're more than happy to send the $300 to your bank account. The second prize is $150, and third prize is $50 there. So hopefully that makes you think you can achieve a top 3 position there and get some dollars or some Bitcoin under your belt. But looking forward to it. But the only way to enter this is to go via the newsletter. So all the entry forms will be on the newsletter this Friday. You have to obviously access the newsletter before Friday, so sign up before then. And you'll be able to get it, and we'll put it on the next newsletter. But entries by the end of December. December's closing share price will be the share price that's used, and then we'll work all the way through to the end of March. And we'll keep the website showing the league tables on a live basis there, so people can log on to the website. They've done that in the past there. It's been really productive there in terms of seeing the amount of people passing through and just checking how they're doing in terms of league tables. But yeah, let's hope this is a good competition there, and good luck to the winners.
And that cash is going to be on top of the bragging rights and the swag prizes that we have from our first 4 iterations. So looking forward to that one. You guys make sure you sign up for the newsletter, 100% free to do. All the sign up details are going to be coming out this week. If you're still watching the video at this point, hit the like button. Feel free to subscribe and let us know what you thought of today's Fed rate cut decision and how you think this may impact the miners. Thanks so much for watching. We'll see you back here tomorrow.